Let's talk about the tax base of an asset. Now, in paragraph 7 of IAS 12, it tells us what the tax base of an asset is. And the important thing to understand is when we're looking at the tax base of an asset, there are two things that we need to consider. So, with an asset, okay, we've got to think about whether the future economic benefits will be taxed, okay, or whether the future economic benefits will not be taxed. And the reason why we've got to consider these two scenarios is because the tax base is going to differ. So if the future economic benefits are going to be taxed, then the tax base becomes all the future deductions. Okay, so that means that in the future, right, when these future economic benefits are taxed, any deductions we can claim against that is what's going to be our tax base. Now, if our future economic benefits are not going to be taxed, then the tax base becomes the carrying amount. Now, let's think about two examples in particular, because these are questions that have come my way recently, so I thought I will just talk about these two examples. If you have more examples that you need clarity on, you can drop them in the comments, and I'll make sure to respond to them. Also, I'm trying to grow this channel to get it out there so that more accounting students can get some accounting knowledge going. So please make sure that you that if you have any friends that would find these videos useful, that you do share it with them. Okay, so that's enough of me marketing my little channel over here. Let's get into the details. So let's think about something like trade receivables. Okay, so trade receivables is an asset. And what is the asset of trade receivables? It is the right for our customers for us to receive cash from our customers because we have made credit sales, right? And so the customers are going to pay us. Now, when we make credit sales, remember that in South Africa, we're taxed at the earlier of receipt, okay, or accrual. That means that when the credit sales accrued to us, we would have been taxed. So if we think of the trade receivables, right, what are the benefits embodied in trade receivables? They are going to be the future cash payments. So when we receive that cash, will that cash be taxed? No, it will not be taxed because the credit sale has already been taxed. So for that reason, the future economic benefits are not taxable, and therefore the tax base becomes the carrying amount. Okay, now let's think of another example. So let's say I have inventory. Okay. Now, I've got to think about the future economic benefits of inventory. So what's the benefit of having inventory? Well, the inventory will be sold in the future, and then the profits are going to be taxed. So with inventory, I've got an asset where the future economic benefits are going to be taxed. That means that the tax base, okay, will equal the future deductions. Okay, now let's think about what the future deductions are in inventory. Remember that when you purchase inventory, initially you're going to get a Section 11A deduction for your purchases, right? But if you have any inventory left on hand at the end of the year, then in terms of Section 22, I forget the exact section, but I know in Section 22 you're going to get a closing stock adjustment, right? Closing stock. So that means that even though you've claimed a full Section 11 for your purchases, any purchases that you have left, i.e. inventory you have left, you're going to add that back. So you're going to effectively reverse the full deduction that you claim. So you're adding back your closing stock. Now with inventory, okay, that is my closing balance of inventory. What are the future deductions I'm going to get? Well, in terms of Section 22, I'm also going to get a deduction for opening stock, okay? Because what that what section 22 is doing is it's making sure that you are getting the deduction for your inventory in the year that you are actually selling your inventory. So in the case of my closing balance of inventory, my future deductions is actually going to be my opening stock adjustment, which I expect to claim in the future, and so that would most likely equate to the carrying amount of inventory. Okay, and so that is why the inventory tax base is its carrying amount. Okay, it's the carrying amount for a different reason, not because the future economic benefits are not taxed, as is the case with trade receivables, but because the future economic benefits are taxed, and in the future we are going to get a deduction, and that deduction is my opening stock deduction in terms of section 22. Okay, I hope that video was useful to you, and I will see you again next time.